What's up, everybody? My name is Kenny Johnson, and in today's video, we're going to be discussing why is it that your bank may drop your credit limit. So, before we get into this topic and we dive into the video, if you like the content that I have created, that I've created in the past, and you watch my stuff regularly, then I would like to ask if you would go ahead and like the video as it helps our content reach more people. So to begin the topic of the video, let's just talk about a few ways that the bank can go ahead and drop your credit limit that you have with your credit card. Now, just so you're aware, the bank that you may have a credit card with, they reserve the right to lower the limit on your credit card at any point without giving you any notice. So don't think that just because this happens, it's you were unjust in any kind of way. This is actually a part of the user agreement when you sign off to receive the credit card. So again, the bank, they reserve the right to go ahead and drop that credit limit, increase the credit limit. Well, they'll ask you usually if you want to increase the credit limit, but they can go ahead and drop that credit limit if they see fit. So one of the first reasons why banks or credit card providers will go ahead and drop the limit that you have for your credit card is because you have suspiciously high amounts of debt that you're constantly carrying on your credit card. So let's just say, for example, you have a credit card with a $20,000 limit and you're constantly carrying a high balance. Now, the crazy thing about this is that you could be paying that credit card off in full. You could be paying that credit card off in full on the due date, but by the time the next statement comes out, the card is maxed out again. So you're consistently carrying a high balance. So this could lead the bank to worry that, hey, this person probably isn't financially stable. They're constantly carrying a high utilization, right? So you could not even be paying interest on the card, but the fact that the card is constantly reporting a high utilization to the credit bureaus could be concerning to the card provider, right? Now, obviously, they're not getting paid interest on it because you're paying off what you owe on that due date, but you are carrying a high balance. Now, maybe let's say one day you decide to go ahead and pay that credit card off in full, and then you no longer decide to use the card again, right? Usually, what happens in this case is that that card provider will go ahead and drop that limit. Now, this doesn't happen all the time, but usually when it does happen, this is probably one of the main reasons. So you've been carrying a large balance. Let's say you've constantly had your credit card maxed out, and then all of a sudden you say, you know what, I'm going to pay off this debt. I'm just not going to use this card again. I'm just going to kind of like let the credit card sit there with low utilization. Then you may notice in the following month that they'll go ahead and drop the limit on that credit card. And so a lot of times we have to remember that these banks, they deal with thousands of clients that have their products, and they're able to track your spending habits. They're able to see where you're spending your money, and they're able to identify when someone is going to pay off a credit card and no longer use it. So they can trace these habits that we have as consumers, right? So usually when they go ahead and drop that credit limit on the credit card, that's an algorithm that's making that decision. It's not necessarily what we may think of that there's one person at CIBC or BMO looking at credit cards and making this decision. It's an algorithm. So they're making these decisions based off of clients that they've had to make this decision for in the past. Okay, so again, this isn't anything new. So if you're constantly carrying a high balance on your credit cards, I am going to go ahead and warn you. Um, Try not to do that continuously. Try not to do that for a long period of time. Now, yes, you're going to have to do that if you're gonna have to do that if you have like a project coming up. Maybe you have like a contractor you need to pay, and there's a big expense that you need to take care of. But that's not something that you're gonna be holding over for a long period of time, right? We wanna be able to show lenders that we can handle the amount of debt that's giving to us. But even though you may be carrying a high amount of debt and you know that you can take care of it, the lender does not necessarily know that, right? They have to go off of what they've experienced with other clients, and they're going to do whatever they need to do to protect themselves financially because again they are a for-profit business. So understand that when you're carrying a high balance on your credit card month over month over month, you're running an extremely high risk of that bank being able to come back and say we're going to drop the limit on this credit card. Okay, Now, next topic is if you're constantly having late payments pop up on your credit card. So now, usually, if it's a continuation of late payments back to back to back to back, that credit card provider reserves the right to close the account and then write it off as a tax write-off if you're still carrying a balance. But maybe you're one of those individuals where you pay it off one month, then you don't, then you miss a payment the next month, but then you come back and you pay it so that you kind of avoid that closure of the account. That again is high risk for the bank to come and say, hey, this person cannot handle this card. So we're either A, going to drop the limit that they have, or B, close the card. Okay. So these two ways are probably the most common ways that usually strike the banks lowering your limit for that credit card. But in most situations, a lot of this can be avoidable. That's why it's extremely important that you have a budget in place. When you have a budget in place, you're able to avoid spending more than what you actually have access to, right? There's so many times we've seen situations to where someone may only make $50,000 a year, but they've spent, let's say, $100,000 in that year. And you may ask, how is that possible? It's because they're using debt, right? So we want to be on the other side of this gap to where we have a budget in place. We're financially responsible. We're not spending more than we're making. Actually, we're saving. We're able to save a good amount of our money, and we're not in this situation to where we need to constantly carry high balances on our credit cards, which would then lead us to having our credit limits dropped. We don't want to be in a position to where we're uh, building up a bunch of late payments on our credit cards, right? We want to make sure that we're avoiding these situations. And you'll always hear me mention that this starts with you having a budget in place. A budget needs to be in place because it allows you to avoid overspending. And if I could speak to my younger self, if I could speak to those that I've had to work with in the past, it's the repeated message of having a budget in place and sticking to that budget and updating that budget as frequently as possible. I myself, I do it once a week. I sit down every single Sunday and I am working on my budget. For you, it may be different. Maybe you don't need to sit down every week. You just need to find your cadence and what works best for you and your finances. But a budget is the best thing you can do. You don't need to go out and hire a financial advisor. But if you want to avoid carrying a high balance, having late payments, it's going to take some type of organization. And the best organization that I have found to this date is not carrying I'm sorry, is by having a budget in place. Okay. So having a budget in place is that organizational tool. And then alongside of that, having a calendar in place. And that calendar is basically a tool that we're using to go ahead and make sure that we're making our payments on time. Now, yes, a lot of credit card providers have automations to where you can go ahead and have that money automatically taken out of your account. But me, I'm a little bit old school. I like to have the calendar because I don't necessarily trust a lot of those processes. So I would go ahead and I would have a calendar in place to remind me when I need to make my payments. And I'm updating that calendar every single month, right? I'm updating that calendar every single month. I'm updating my budget every single week. Those are my cadences. Your cadences may be different based off of your financial situation, but it's going to change. It should evolve because your finances should constantly be improving. And when you make more money, you are going to have to make changes to your habits. It's natural. It's completely natural. Me 10 years ago, I did not have the same habits that I have now because I am in a completely different place financially. And you're going to find yourself in that same situation. You're going to find yourself that where you have a set of these habits they're going to need to constantly improve over time because you acquire more capital and you're responsible for more, so it's going to take more from you. Okay. So now, along with the banks having the ability to drop your credit limits, it's important that again they reserve the right to do this without reason. They don't need a reason to do it. You could have a clean slate. Maybe the situation was you just don't even use the card at all, and that happens as well. You could have been in a situation to where you just let the card sit there and you don't use it, and they'll drop the limit because they see that you don't use it. But at the end of the day, the bank has complete control over these accounts. So my advice to you is going to be try to create as many relationships with as many banks as possible. There's no reason for you to just stick with one bank. While you can, and it's okay, it's always a good idea to have multiple relationships, right? I'm not just going to stick with BMO. I'm not just going to stick with CIBC. I'm going to open up multiple accounts because if for whatever reason, God forbid, if one of my cards, if the limit were to drop on one of these cards, I know I still have capital. I still have accounts with another bank. Okay, so you want to have leverage because again, you don't control what the banks do, but you do control the amount of relationships that you have. So again, I can't control the credit limit that I necessarily have for one of my credit cards. So for example, let's say one of my CIBC credit card. I can't control. CIBC can decide tomorrow to drop that limit down to $1,000, even though I've been completely responsible for the past, let's say, 5 years with having their product, right? So even though I've been responsible, never carried a high balance, always paid it off on time, never had a late payment with this card, they reserve the right to close it. They can even close the account tomorrow. But I have so many other cards that I can lean on that if they were to do that, yes, it would suck. It wouldn't ruin my life because I have other cards I can lean on. And I think that's the most important thing that you should get from this lesson. So I don't want to fearmonger you with saying, hey, your credit card provider can drop your credit limit at all times without giving you a solution. All right. So yes, they can close your credit card at any point. They can lower your limit at any point without giving you any reason. But you can go out and create multiple relationships and have multiple cards with multiple lenders. And you don't have to go out and get a credit card with an annual fee. You don't have to do that. Even Amex has cards with no annual fee, right? It just takes you going to their website, going through, and I always recommend a cashback card unless you travel very frequently. Go and get let's say a bank's cashback baseline card with no annual fee. Pretty much every bank has one. A cashback card with no annual fee. You have just created a relationship with that bank for free. Now, well, it costs you the inquiry, but as long as you're spacing it out, it's not hurting you that much, right? It's not that detrimental. But you went out, you got this credit card, $0 annual fee. It costs you nothing. The application doesn't cost you anything. The only thing you're giving up is the inquiry. But if you space it out, then it's not that detrimental to your credit score. But I would entice if you're serious about credit, um, every year try to establish a new line of credit, open up a new account at least once a year. That way you're building a strong foundation so when 5 years pass you by, you see that you have really solid relationships with multiple institutions. And if BMO decides to close your $30,000 credit card, you don't care because you have even more capital with other institutions. Okay. And by the way, I'm speaking from personal experience. I had a BMO credit card. I believe the limit was $30,000. They dropped it all the way down to 1,000. Yeah, to $1,000. It sucked initially, but I did not care because I have a lot of capital with other banks. So I'm giving you this advice from a place of experience. Okay. Now, if you like this content, please like the video as it will help it get out to others. And I try to post a video every Monday. If you need help with your credit, if you're dealing with collection accounts, I operate a company all across Canada that helps Canadians fix and repair their credit. You can send us an email. It's info@kennyjohnsonuniversity.com. We'll be happy to help you fix your credit. And until next time, peace.